Hello. In today's video, I'm going to talk about something that often gets overlooked. And that is it better to sell by your strategy or sell when your strategy says you should? Or is it better to just use a flat take profit? The DCA module within Jackrabbit allows both conditions. But which one is best and more opportunistic? I hope in this video that I can answer that in a meaningful way. So let's start. First of all, I'm on ADA with an empty chart. First thing we need to do is come up with a reasonable recipe to test and examine. So let's go with something rather simplistic but time tested. So let's start out with a basic momentum. It's going to be real simple, straightforward, nothing over the top. Show the chart. I always prefer a split channel momentum. And I'm going to set this to a very basic 200 EMA. So a 200 EMA momentum. Pretty straightforward, pretty easy. Not over the top, but I do want inverted signals. This is what you need to follow a trend. So pretty simple, straightforward, easy to use. When the price is above the momentum, you're in an upwards trend. When the price is below the momentum, you're in a downwards trend. Pretty straightforward. Now let's go to another indicator that is time tested and has proven a successfully aggressive track record. Let's go with MACD. Now I'm going to go with my basic settings. Again, nothing over the top, just simple prime numbers. I'm going to leave all this as it is, and I'm going to move this to prime numbers. You don't need to use prime numbers. I just find it fits my risk assessment better. It also provides better opportunities, in my opinion. So now let's link the two modules together. So very simple, very easy, very straightforward process. We have a very nice looking little combination. Now let's finish it off with dollar cost averaging. We're going to link it to the MACD. And we're going to turn off all of the unnecessary stuff on a chart. That way we get a nice, clean looking chart that we can follow. There we go. Now the default for the DCA module is strategy mode for your sell method. And I'm going to put this where I would normally put it, which is to require a $600 budget. Now, let's open this up so we can see it better. Clean up some of the colors so that they're a little easier to see. And not so glary on the eyes. Okay, so we have 5 trade cycles at roughly a 25% profit if we sell by strategy. Our max position is 4. So if you have a $10 position, your maximum exposure is going to be $40. And as you can see, we have the buy and sell markers appropriately on this chart. Now, I'm going to use a 5-minute chart. And on a 5-minute chart, 4 trade cycles at 11% profit. A 5-minute chart is technically 17 days. But we are dealing with averages and rough approximations, so I'm going to equate the 5-minute chart to 1 30-day period, or 1 month. So 4 trade cycles at 11% means this recipe will bring in a 44% profit with a maximum exposure of roughly $40. If you use $11, it would be $44. So there you have a good, clean example. Now, let's actually change this to just a flat 2% take profit. So that means that once we are above 2%, the DCA module is going to tell the system to sell. Okay, now we have 16 trades at 2.9% rough average. So basically 16 trades by 2% is 32%. Total profit in 1 month period. But we only have an exposure of roughly $30. So it's dropped our exposure and it's increased our number of trades, even though we don't get the actual rate for this coin if we let the strategy do the work. It would seem then that using the strategy to sell is a better option. Because here we have a 44% profit. So that's basically giving us a 12% more profit, even though we have slightly longer exposure. There are reasons why you may not want to have this exposure. For example, let's go to a more difficult coin. Here is 1 trade cycle, 14%. And as you can see, in 1 month period, that's all it's accomplished. But let's see if we can find a better example. Actually, let's go to a coin that I don't recommend you trade, and I don't trade it at all. Not unless you understand its dynamics, because it can be a very difficult coin. So here we are. This coin is not a high market cap coin. It can be very tedious, very difficult, and very cost consuming. So 8 trades at 5%, or roughly a 40% profit in 1 month. with a maximum exposure of $33. Let's see what that looks like under the strategy. Under a flat take profit. So we've gone up to 20 trades for the same exposure. And 20 times 2 is still a 40% profit. But because we've nearly doubled our trades, we've recycled our base position more frequently. So in this case, it seems more viable to use a flat take profit over a strategy. And that's important to consider when you are actually deciding what coins to choose. Some markets can be very difficult and very tedious and offer opportunities that are better with a take profit with less exposure or less risk. XRP comes to mind right now, as it has taken a rather brutal beating with the SEC allegations. Now, I will probably cover that in some future point in terms of what I think about that, but for now, I'm just going to continue with the technical analysis aspect here. Let's put this back in strategy mode. So here we are, 5 trades, 15% profit, maximum exposure right now is 4 positions or $44. So 75% profit in 1 month is what this would have made as a rough average. Not bad, but I personally don't like the amount of exposure that XRP would have. So I would personally be more inclined, and in fact I do in my own personal trading, nearly double the amount and 50% profit. Not as much profit, but not as much exposure and much faster trade-offs. Selling by strategy keeps you in the market longer. That's why you have less trade cycles. Selling by a flat take profit gets you out of the market quicker, but you are able to get more trade cycles. So it is less exposure to a given market condition. For example, the SEC news here has had a devastating impact. And if you go up and you look at higher time frames, you can see XRP had a fairly decent run prior to the SEC news. Here we have 37 trade cycles for a take profit. Here we have significantly less for the take profit. So again, a give and trade. 55% or almost 80% based upon take profit. This consideration needs to be part of your risk assessment. I personally prefer less exposure and less risk, and so I prefer a flat take profit on a regular basis. There are a few coins that I will trade with sell by strategy, but I consider those higher risks, so I'm more careful about my coin choices. If you want in and out of the market as quickly as possible, then really this is the only way. It increases your trade cycles, and it gives you fairly close to or more than the profit you would have achieved the other way, being sell by strategy. There are a lot of coins that are just not that good for long-term exposure. For example, BAT is a notorious coin for long-term exposure. It can be very difficult to work with. As you can see, 3 trade cycles for sell by strategy with a 70% profit. That is quite difficult to work with, considering its history. But if you use a 2% profit, or a take profit, here you have 23 trades, and it's saying an average of 3%. That's 46, 69% profit if you use a flat take profit on a coin that is normally quite difficult to work with. When you are evaluating your choices, it is important to consider the duration of your coin. It is important to consider the market capital, the volume, and the liquidity of your coin. A lot of coins perform near, equal, or better with a flat take profit than a strategy-based sell system. But at the same time, a strategy-based sell system brings in those monster profits. And that is something to be aware of as part of your risk assessment. So the question I asked in the beginning of this video, which one is better? That really is personal choice based upon your exposure. How exposed do you want to be to the market? It's easy to look at these charts in hindsight and see what happened. But when you have live money on a live chart, there is no hindsight. You have to make guesses and decisions in real time. Is it better to simply be happy with what you have and leave a little profit on the table? Or should you simply be patient and wait it out and get the fruits of your labors? Only you can answer that question. I personally always gravitate to take profit as my first choice, with a few rare exceptions. For me, my own decision-making process is that I can recycle my budget quicker and more effectively with less exposure. I don't have a large budget, so if I can recycle my positions faster with a take profit, then I am more likely to do so and be happy with what I get. It's a matter of understanding my own personal risk assessment and my own financial limitations. I keep my accounts extremely limited, simply because I don't have a lot to expose. So for me, buying and rapidly selling is much better, because then I'm recycling what I just used and selling it again. So I'm not increasing my overhead, so I actually have the ability to trade more coins with this capability. if I keep my money in the market longer, I am likely to run into a situation where I need to maintain a position longer than I need to or would want to, and am more likely to need a higher budget or lower number of coins to trade. So from my personal perspective, quantity over quality in this case works in my favor. Until next time.